Hey guys, it's that Dividend guy coming at you with a Robinhood portfolio update. So I did sell out of a position and I switched it out for one that I feel like over time is going to do very well. So I sold out of Exxon Mobil, um, and I lost some substantial dividend income. But let me explain to you why I'm okay with that. So I do like big oil. It fluctuates. It's a really good commodity to own due to the fact that so many people are dependent on it. We don't really have a choice. But I do think the future is an EV, and I think slowly but surely Exxon and Shell and all the BP, all these big oil producers are going to taper off. And I don't think that's a bad thing. I think Exxon is going to be paying a dividend, even if it doesn't grow, for a very long time. I'm thinking like probably the next 30 years. But um, the issue that I have with Exxon and the the oil um, stocks is the fact that most of them either cut or um, sustain their dividends, so they're not really dividend growth stocks anymore. And so that's the problem. So I bought it thinking, okay, it pays 87 cents, it's great, which that's true, it does. But the metrics for the company are all weird now because of how much um, COVID affected the companies, which is fine. I think over time that will get back to normal. Um, but I don't like that it didn't grow the dividend, and so I cut them because that's the original. That's not the original reason why I cut them, because I cut them off before they did that. But I do need to cut Exxon, so I did sell out of them. But that means that I had about 4 grand to play with in the portfolio, and I needed to reallocate that capital. And I had a lot of options for this, like $4,300 in the portfolio, about where I was going to put it. And so I looked at Morgan Stanley, an investment bank. I looked at Goldman Sachs as well, which is kind of in that same sector. Then I looked at Kroger, which is a grocer, the biggest grocery store chain in the world, or sorry, in the U.S. And I love Kroger, but the price for the dividend wasn't great. I also looked at getting Pfizer back because I do like Pfizer. I think that the vaccine is going to be a massive profit driver for them. Um, but the only problem is with that spinoff that they just recently did. I don't know how aggressive they're going to be able to be, um, given the products that they actually spun off that did bring them a lot of revenue. It's just like the AT&T spinning off Time Warner. Time Warner was a pretty big chunk of profit and revenue for that company, just like these drugs were um, for Pfizer. And so what I think is going to happen is Pfizer is going to get massive profits from the vaccine, which is great, but I don't know if there's going to be enough profit in there to um, grow the dividend at a substantial clip like they had been doing. But I could be wrong. So what I did instead of Morgan Stanley or Goldman Sachs or Mercury Insurance, I looked at an insurance company as well, or Pfizer. I went ahead and I actually bought the spinoff of Pfizer because I looked at their drug pipeline and I love what they produce. So I went ahead and I bought shares of Viatris, and the reason that I did that is because they actually produce generics, which I know Dividend does this as well, which Warren Buffett actually owns. But the reason I bought them was because they actually own the drug that I take for anxiety and depression, and I wanted to be able to at least put some more cash in my pocket, right? So I only pay like $5 or $7 or something like that for the medication. But the thing is, just like I said with Disney, how I wanted to own enough Disney stock to pay for my Disney Plus subscription, I wanted to own enough Viatris to pay for my medication for the rest of my life. So that's what I went ahead and did. So I went ahead and I bought, with that, like $4,300, a little bit above that. I went ahead and bought 300 shares of Viatris, which compared to Exxon, doesn't pay as well for a dividend, and I'll tell you why I'm okay with that. So Exxon paid me $69 every single quarter. Viatris with 300 shares, it pays 11 cents a share. But the reason that I'm okay with it cutting like $40 worth of dividend income is because when uh, it seems similar in my opinion to when Abbott spun off AbbVie. So that's the play here. Is I want to get in on it before the crazy big dividend growth and before the big price jump, if there is one. Could be completely wrong about this, this prediction, but even if I'm half wrong, I'm gonna be happy about it. So I went ahead and I bought 300 shares at an average cost of 14.52. It is about 11% of the portfolio. As you guys can see, the today's price and total are the same, and they will be at least for today, because I bought the shares today. So I sold out of Exxon just because the payout ratio is crazy right now. So is the metrics are really weird for oil companies, and I don't like that. And plus, they cut the dividend. Well, Viatris already stated that they're going to be paying an 11-cent dividend, which is great. So that's what people thought, that Pfizer was going to cut the dividend by how much Viatris is paying it, because that's generally what happens when you have a spin-off company. That's not what happened. But the metrics for Viatris are just crazy. I'll get into the drugs as well. I'll talk about those a little bit. But the reason that I wanted to buy them instead of Exxon is because Viatris has like less than 20% of their earnings, or their projected earnings, or their yearly earnings, or whatever you want to call it. Less than 20% of their profits are going towards their dividend, which I think AbbVie's at like 50%. So generally, companies pay like 40 to 50% or more of their dividends, and I go looking for companies that pay less than 50%, because that means that they have more options to grow the dividend. Plus, they have a lot of free cash to still invest in the business. Like Coca-Cola has like I think 55 to 60% um, dividend payout. Altria sits at like 80% because that's what management wants. I believe AbbVie's around a 60% payout ratio. National Retail is a REIT, so it pays out 90% of its profits to its shareholders. Um, Aflac is below 30%. Um, as is Travelers is sitting at like, I think it was like 35 or 33%. So I look for companies that have low payout ratios, that have um, enough earnings to grow, or that are growing their earnings, and that can boost their dividend at a substantial clip. Viatris fits that, and Exxon Mobil, in my opinion, no longer does, due to the fact that they cut the dividend. So that's why I switched it out. Exxon Mobil doesn't fit the portfolio. I wanted it for what it could pay, not what it's going to pay. But Viatris, I feel like, is a way better play, because I do lose substantial dividend income right now. I lost like 6, 12, 12, about $240 a year, which sucks. But long term, if Viatris boosts the dividend by a penny a year, I think the growth over time, when I'm like 30, will definitely make up for what I lost with ExxonMobil. So, um, quick, side note about why I decided to buy Viatris for the product line. They own Zoloft, which is citrulline is the generic, which is what I take for my anxiety and depression. They own Xanax, which is huge for I think it's OCD, depression, and anxiety. And then they own Viagra as well, which I just love. That's so funny. So um, I invested in a drug company for anxiety and depression, and for forced hard-ons, which I love. I think it's funny as hell. Um, so originally, the reason why I didn't actually buy Viatris and I bought Pfizer before was because I didn't know what the spinoff owned. I didn't do research on Viatris, but I went ahead and did substantial research on Viatris this weekend, and I actually like it better than I liked Pfizer metric-wise. And a lot of the brands that I actually invested in Pfizer for, Viatris now owns. So um, I think it's just going to be it's definitely a buy and hold for the next 10 to 15 years. It's cheap enough that I can buy it in bulk. So this is kind of like a Costco, Costco kind of stock, as in I'm just going to buy a crap ton of it. And even if it doesn't do substantial dividend growth, I can expect it to do enough that I think it will outpace Exxon, um, within the next 10 years, is in the growth is going to be enough to validate the fact that I sold Exxon. So I'm not beating myself up about it. I know I lost money in the near term, but I think long term, Viatris has a phenomenal growth potential. Like I said, I believe the payout ratio is like 12 to 15%, and generally companies have about a 50% payout ratio. So they could grow the dividend by a massive clip year over year, still be totally fine. They have their own drug pipeline that they're researching as well. Plus, they have those names, like I said, Zoloft, Xanax, Viagra. They have like I think 12 or 14 more drugs. Those are just the three that I picked up on and did massive research on. So they make my anxiety and depression med, which is Zoloft, but I have sertraline, which is the generic. So I'm literally going to be able to buy my medication for the rest of my life with the company that makes it. So I did the Disney, I'll call that the Disney strategy, where I buy enough to use the dividends to buy my subscription. So I bought enough to buy my medicine. So I'm happy about that, and I think over time this could possibly be a second AbbVie in the portfolio. I wasn't investing. I wasn't even old enough to invest, I don't think, when AbbVie spun off. So I'd rather put $4,000 in a prediction that pans out, and if it doesn't, I still collect pretty great dividend income. $33 a month is nice. It's more than what Realty Income pays me. So I'll still be getting dividend income. I do think it will grow, even if it grows less than what I think it will. I'll still be happy with it. So 300 shares of Viatris, guys. I did sell out of Exxon Mobil, but hopefully the reasons that I've given you in the video make sense as to why I switched. And just expect me to keep buying it. Viatris is going to be purchasing Coca-Cola. So Aflac is going to be buying Altria. And then Travelers will be purchasing Allstate long term. So Viatris already is close to buying Coca-Cola, but within a couple months, given how many shares I can buy, it will be purchasing Coca-Cola for the rest of my life as well. So it not only fits the long-term dividend growth strategy that I have for the portfolio, it also makes it easier to buy Coca-Cola, but I can't do it quite yet, which is fine. So 300 shares of Viatris, guys. Let me know how you feel about the move down in the comments below. Thank you so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Sorry, I will. I'll see you guys tomorrow with the Robinhood portfolio update. Have it. Thank you guys for watching. See you tomorrow.